Welcome back to Green Candle. Today is Thursday, November 27th, 2025. We've covered how Bloom Energy provides on-site power for AI data centers and how Eaton manages that power inside the facility. But there's a massive piece missing. Where do the huge volumes of utility-scale green electrons come from that hyperscaler's demand? Today we're looking at the third leg of this AI power stool, Nextpower, ticker NXT. Disclaimer first, I am not a financial advisor. This content is for entertainment and educational purposes only. All trading involves risk, and you should do your own due diligence or consult a professional before making any investment decisions. Now, NXT isn't a speculative startup. For 10 years straight, they have been the undisputed #1 global leader with a 26% market share and over 150 gigawatts shipped. Think about that scale. On November 12th, they officially rebranded to Nextpower. Why? Because they aren't just a hardware metal bender anymore. They are pivoting to become a full integrated power technology platform. They are the operating system of utility-scale solar. Their moat is a fortress. Their edge is TrueCapture. This is AI software that creates a digital twin of a solar farm and optimizes every panel in real time. Unlike competitors' linked rows, NXT's independent rows can dodge shadows. The result? They boost energy yield by up to 6%. That's huge. They protect this tech aggressively with 175 plus patents. Plus, they have a massive domestic shield. Their significant U.S. manufacturing means they qualify for IRA Section 45X tax credits. Competitors face tariffs. NXT has a built-in cost advantage. So what's the fuel? Look at the financials. In a choppy solar market, NXT just beat estimates with $905 million in revenue. But the real story is the backlog. It's sitting at a record $4.5 billion. That is up 60% year over year. This is locked-in future revenue with massive visibility. Margins expanded plus 200 basis points to nearly 34% thanks to operational leverage, and they're just getting started. In H1 of 2026, they will launch the power conversion systems, unlocking another $500 million plus addressable market. This leads to the macro reality. The exact same demand driving Bloom and Eaton is fueling NXT. Hyperscalers like Google need 24/7 clean baseload power. NXT's new Solar Plus storage platform is the direct solution for the utility side of that equation. Even Goldman Sachs calls NXT a key pick and shovel play for the AI boom. With U.S. solar capacity growing another 35 gigawatts or more in 2025 alone, the tailwinds here are hurricane force. All right, let's look at the battlefield. NXT is in a classic coiled spring breakout setup. It's forming a descending triangle, coiling tightly between $83 and $100. The Chaikin power gauge has it rated as very bullish. The floor is rock solid. We have massive institutional support between $83 and $85 range, which is being defended by the 200-day exponential moving average. The breakout ceiling is at the $92 short-term pivot, with a psychological barrier at $100. We're betting on a sector rotation into defensive growth leading into late Jan earnings. For the conservative traders, we have calculated trade, a January 2026 bull call spread. We buy the $90 call and sell the $100 call. This defines your risk and plays the high probability move back to the top of the trading range. For the aggressive traders who want to capture the full breakout, we have calculated second trade idea, a February 2026 $100 calls. The entry is only on a confirmed daily close above $92 level. This confirms the breakout is real. Our first target is a retest of the $100 level, and the final target is the retest of the all-time high at $112. But we always manage risk. The hard stop for both trades is a daily close below $83. If that 200-day support breaks, the institutional floor is gone, the thesis is invalid, and we cut it. We trade the chart, not the hope. Smash that like button and subscribe to Green Candle to complete your AI power portfolio. See you on the next trade.